Alright, guys. Great. Welcome. Okay, this is our very first live stream on YouTube. I've been doing this for like very long time ago, but this is in first time in I would say within this 1 or 2 years. Okay, so the objective of me doing this is I thought because right now, okay, I'm actually building up a portfolio and of course on eToro. Some of you perhaps already knowing this. And there's this feature where they're able to copy me on my portfolio, right? And I thought it's interesting and really something that I would like to do is maybe on the bi-weekly basis to come in here doing a live stream to kind of give you an idea, even if today you are not a copier, not a follower on the eToro, at least you can understand what are some of the stocks that I'm personally looking at in my current portfolio, right? So what's gonna happen, of course, if you're joining in, okay, and you have questions, we'll have a Q&A session at the end of this as well. But for now, it's more of just coming in very casually, walk you through my thought process on the market, give you some ideas as to what are some of the stocks I'm investing. Okay, so that you have a better understanding, even though it's more or less like you do not need to do anything because you are literally piggybacking on the eToro feature to follow all the trades that I'm taking. Okay, but I thought it's important, at least you know why I'm trading and investing in those companies. Okay, so good. Let's first start off with the big macro perspective. Okay, so this is what I usually do for the stock market. Okay, I like to understand what's happening from a global macro environment, going down into individual companies where we want to look for, of course, good and solid companies to invest in. Okay, so over here, just very quickly, we likely won't have the time, and of course I won't be able to go in depth as to what are all these things, but I thought it's just important to briefly touch through all this so that you know what are some of the things that I consider when I invest in the market. Okay, so macro environment here basically gives me a very good idea as to whether the stock market is going to be supported. Supported means whether the stock market is going to continue rising, or are we going to see a major correction or even a potential crash in the stock market. Okay, so over here, the screen that you're seeing right now, you're able to see the overall liquidity. Okay, so as of today, I've updated this. Okay, as of today, it's a score of 1. So the maximum score is positive 8. The minimum, the least it can go is negative 8. Okay, so right now it's actually 1, which tells me that it's not very bullish. Okay, and if today you are trading or investing into the stock market, you might want to be a little bit cautious. Okay, that's what the idea of macro is telling us. Okay, from last year, 2020, I think the stock market is easy, right? Basically, you just buy anything, you'll likely make money by the end of 2020 because the macro liquidity environment back then in 2020 was 5, right? 5 out of 8 is very liquid. The stock market is being supported. As of January 2021, okay, I've actually updated in one of my YouTube video as well. We talk about how macro liquidity has dropped from 5 to a scoring of 3. And as of today, you can see it has continued to drop from 3 to 1. Okay, so what this means is that obviously you do expect some kind of correction coming down. Okay, and this is a very important aspect where psychologically you need to be prepared that your portfolio might suffer a little bit of a pullback, a bit of a drawdown, but at the same time, for someone like me, it'll be a good time to actually start looking for investment opportunity, because when the stock market drops, that is a discount, right? For you to actually go in and invest into solid companies so that when the market eventually starts to recover again, that's where you make your profits. Okay, so right now we're definitely in the corrective phase. The market is likely going to correct maybe for another 1 or 2 months. Okay, this is something you need to expect. Okay, so that's the big picture from macro side. So actually, if you go over to my eToro account, you'll be able to see we are suffering slightly drawdown in March as well, right? Because the market is actually correcting. Okay, I'll walk you through a little bit more of all this after we go through the big picture. Okay, we'll dive into like my performance, the stocks that I'm holding on. Okay, now I also look at the whole economic cycle to understand which sector in the financial market as a broad picture, right? Which sector tends to be performing well during this particular period. Okay, and obviously some of you who are a little bit more active in the market, you will realize that how come technology stocks are dropping right now, and the financial sector are like banks are actually performing. Okay, this is all due to what we call rotation, because of how the economic cycle tends to move from one phase to another, and that will affect how your businesses tends to perform, and then naturally that will flow into how well the economic and the stock market will perform as well. Okay, so as of now, obviously there are some indicators we track here, but we'll skip all that. I'll give you the result as of now. Okay, so as of today, we are in a transitionary phase. You can see over here, I'll highlight a little bit. Okay, we are transition from full recession period towards early recovery. Okay, and I think this one here, without the indicators, I think most of you will probably be aware already, right? From COVID, and then right now we're starting to opening up. We have vaccines. Okay, and that's where we're transiting from recession to early recovery. Okay, and of course there are certain sectors that tends to perform better during early recovery stage. Okay, and over here you can see this model. Okay, so we are right now focusing on perhaps sector related to industry, basic industry, and energy sector. But of course you do see finance sector tends to perform a little bit recently as well, simply because of the concern, or would say the expectation of interest rate hike. Okay, we'll talk a lot about that in a while as well. Many things to talk about, okay, but I just want to give you a big broader picture for now first. All right, so for me, when I invest into the market, I do consider the economic cycle. I do consider sector rotation, but that does not stop me from entering into good companies that is not in the early recovery phase sector. Okay, so this is more like just a guide for me to understand where or how I position my portfolio. Do I go in bigger, or do I allocate more funds into that sector, right? That's how I use it. Okay, so this one here hopefully give you a big picture of it. Okay, so with that, let me walk you through the performance as of to date. Okay, on the stock side of it. Okay, so when I'm trading, or I would say trading and investing in eToro, on eToro is basically purely based on stocks, right? For me, on FX, that's another portfolio, right? So this is purely on stocks. Okay, so you do see that right now, of course, 2020, again, I say it's a very easy year. Okay, so the year ended with close to 37% profit. For 2021, so far, actually, I wouldn't complain. Okay, we are up by about 1.66%. Okay, obviously, March is a down month. Okay, down doesn't mean lose money, right? How they track over here is they track your entire portfolio, right? So it includes your running trade or running investment as well. Okay, so a drop of 2.11 is actually calculating from the peak of my equity. It dropped by about 2.11% in March. Okay, so so far, based on last year and this year, seems like March is a month where we'll suffer some drawdown. Okay, but this is so far the performance. Okay, and I think it's important to not just look at the return, okay, but also to look at the average score over here. Okay, so this is basically a track of the drawdown. Okay, which means that when we lose money, or when the portfolio starts to have some kind of correction, how deep is this correction? How deep the drawdown is? So you can see over here, I'm pretty conservative in my investment portfolio. Okay, so for the past 1 year, the worst dip was actually about 9.17%. Okay, and obviously, if you take a look at like weekly, worst drawdown on the daily was about 3 to 5%. Okay, so that to me is considered pretty conservative. All right, and that's how I want my investment portfolio to be. Right, naturally, you might see some of the other traders and investors, or popular investors on eToro, maybe scoring a higher return. Maybe they are looking at, like, let's say 50 to 100% return a year. Okay, but you want to consider the risk as well, right? That's part of trading and investing. Okay, it's a balance of risk and reward. Okay, so this is how I construct my portfolio. I want it to be conservative. Okay, I don't need like huge, massive return. But of course, if every year over here I'm able to kind of build this portfolio an average of maybe 15 to 20% every year consistently with very low drawdown, that's the objective, right? Okay, and if you go over to the portfolio over here, this is where you'll be able to publicly see all the stocks that I'm holding in my portfolio, right? But obviously today I won't have the time to like go in specifically every one of them. Okay, it'll take maybe half a day or even a day. Okay, but you know, I want you to know that all these are publicly available. Okay, but today we're going to talk about some, so that you understand the general thought process and the approach that I go in, so that you know, those related, you know, metrics, philosophy, principles are the same. Okay, so let's go over, you know, to the strategy component first, to share with you a little bit like what are the techniques I use to build up my portfolio. Okay, mainly there are three strategies. Okay, so let me bring you back to my here, right? Not this. Okay, okay, I didn't put it here, but I'll update. Maybe I'll update in my bio. Okay, but let me share with you in this video. Okay, there are three strategies that I use to build up my portfolio. The first one is what I call dividend growth investing, which means that I allocate a portion of my portfolio to invest into companies that pay off dividend. Okay, and the idea here is you want to invest in companies, in solid companies, and hold them as long as you can, and then just keep collecting dividend. Okay, and that's the first strategy I use. The second strategy we use is what we call seasonal trade ideas, which means that I'll look at a certain recurring pattern that happens, you know, every year, okay, and then we trade them just based on statistics. So that's really just based on historical recurring pattern. During this particular period, this stock tends to rally, and then therefore we just trade it. Okay, so we go in and come out within a selected period of time. The third strategy I'm using is what we call momentum trades, which is more or less like every month we just look at which stocks in the US market tends to move with the largest momentum, then we'll just ride onto it. Okay, so generally there are three strategies involved. Okay, and I would say right now, because we are seeing the market correcting, okay, I'm very actively right now to kind of build up the dividend side of this three strategies, right? Out of the three, the dividend one is a little bit more active recently because market comes down, it's a discount for us to enter and invest into company, right? So let me share with you a little bit as to what are some of the examples over here, right? So if you look at, let's say, like this two companies, right? Coca-Cola, which is, you know, you guys are probably familiar with that company already, okay? Or even this one here, ticker symbol HER.MI, right? Listed in Milan, okay? So these are example of seasonal trades, okay? Which means that we look at recurring pattern during this particular period. There's a high chance, high probability this particular stock will rally, and then therefore we just trade it. Okay, so let me bring you to that. Okay, so over here you can see these are all the stocks that are based on seasonality, which means that you can see very clearly when we are entering, when we are exiting, and what's the probability based on historical recurring pattern, what's the average return. Okay, so to date, there are 14 here, but of course on eToro, LISN is not listed there, so I'm not able to trade it. So we do have 13 stocks right now in our portfolio that is based on seasonality. Okay, so there is some winning, there are some losing, of course, but you know, these are all based on historical statistics. So we enter and exit very, very systematically. Okay, no guesswork. Everything is just based on systematic. Follow when to enter, when to exit. Very specific. Okay, so you can see over here, Coca-Cola, we entered on 22nd of March, and then obviously we'll look to exit by 26th of July. And this trade has a 90% probability based on the past 10 years. There's 9 years, this will make money. Okay, of course, we won't know whether this year will make money or not, but based on history, okay, that's where the probability comes in, right? And it has an average return of 9%, and to date is running by about 3%. Okay, so you can see over here, that's where Coca-Cola is, right? Running is about 3%. Okay, so that's how this group of trades are being traded. Okay, so very, very systematic, very just go in and get out at a very specific date. Of course, you do see some of these trades here are in the red. Okay, like MTCH, Adidas, DLR, JD, Novo, OKE, right? These are also seasonal trades. Okay, but of course you need to give some time. Not necessary is gonna be a winning trade. Okay, not necessary is gonna be a losing trade. We just need to give it some time and see how it goes. Okay, so that's the first group of trades that I take. Okay, not much to really talk about it. I think this one here, the idea is, in doing this live stream, walk you through my portfolio, is to give you the idea okay, why we took those trades. Okay, I think might be important to some of you guys who is copying my portfolio here on eToro to at least understand, you know, the trade, the rationale behind it. Okay, so that's the seasonal aspect of things. Okay, the other one is more of dividend. Okay, so dividend is a little bit more research, a little bit more work that I put in, because the idea here is to invest into companies that I'm prepared to hold as long as, you know, it needs to. Okay, so I want to make sure that the companies that I invest to for dividend portfolio is solid, right? Companies that are really, really good. Okay, so you can see over here, this few companies that is currently in our portfolio, INTC, LMT, CLX, PG, and J&J, okay, they are what we call dividend companies. Okay, so if you take a look at that, right now at this list, right, Intel here, of course, is performing not too bad. Okay, this is a dividend stock that I invest into. Okay, so there are a couple of them, right? Like BLK is also a dividend stock. Apple, Visa, 3M, Hasbro, P&G, J&J, right? These are all dividend stocks. Okay, so these are stocks that I park it under what we call dividend portfolio. Okay, it's really there for the long run. It's there for us to keep collecting dividend. Okay, so if today you are actually following my portfolio, copying my portfolio as a copier on eToro, you do get this dividend as well, right? Okay, so under eToro, they don't call it dividend, they call it refunds, but essentially they are dividends. Okay, so let me walk you through a little bit in terms of let me close off some of these tabs, right? Let me walk you through my whole thought process of how I actually analyze a company from a dividend point of view, so that you have a brief understanding and hopefully give you that confidence as to how we actually select these companies and put it into our portfolio. Okay, now there are few ways of doing analysis, right? I believe if today you have some exposure into investing, you probably heard about like fundamental investing, fundamental analysis, technical analysis, and such, right? So for me, I look at multi approaches. Okay, so I don't have a belief system where I say that which one is better. I think the more you know, the more you actually look at it from different angle, different perspective, the better it is, right? The more informed and a decision you can make. So for me, I look at macro, I look at sector, I look at fundamental, I look at valuation, I look at technical. Okay, and of course we also look at seasonal trends. Okay, so over here, let me walk you through a case study on Intel. Okay, which so far this is running pretty solid, right? Close to 38%. Not only from a dividend point of view, but you are also profiting from the capital side of things, right? So that's what I want. So let's start off with fundamental. Okay, so again, very quickly walk you through all these metrics. It's a very systematic process that I use to analyze a company. Okay, so the fundamental part of analysis, I also give it a scoring. Okay, so a maximum score a company can actually get is 21. Okay, so if a company actually score 21 points, that company is like you literally close two eyes, just invest into it. Okay, because the fundamental is just solid, right? Okay, so max is 21. Of course, the minimum here is 0. Okay, so to me, any companies that is below 10, you want to be very cautious. Okay, that means the company might not be a very strong company from a financial point of view. Okay, so Intel here has a scoring of 20 out of 21. Okay, and this is definitely one of the companies that has the highest scoring in my entire portfolio. Okay, and therefore I'm very, very confident in Intel itself. Okay, so basically there are a few metrics here. Maybe some of it you recognize, some of it you might not. Okay, but again, the objective of this is not to give you like to confuse you, but the objective here is to give you that thought process, give you the understanding, okay, of my thought process. Yeah, so over here you can see Intel is actually a score of 20, which means that this company is really solid, okay, from a fundamental point of view. And what I did, of course, is not just looking at fundamental, right? We look at technical as well. Okay, so this is where the technical chart is. Now, Intel, we have been holding this for some period. Okay, so depending on when you copy my portfolio, if you copied it earlier, like last year, you might have Intel in your copy portfolio as well, right? But if you copy like maybe later part of the year or this year, then you might not have it. right? But let me walk you through the technical aspect as well, right? So I don't just look at fundamental, but I also use technical to kind of time my entry, right? Which I think is important, because if today you are just basing on fundamental, then you have no idea when to enter into the company, and you might enter at the very top and then you need to wait for a very long time before it recovers in terms of capital. I don't like that, okay? While this is a dividend investment thesis, I want it to be also making capital gains. Okay, that's where I not only gain from the dividend, I also gain from the capital gains. Okay, so I use a little bit of wave analysis, market profile analysis based on technical. Okay, so you do see that we are able to enter Intel over here. Okay, let me click it in. Okay, so you can see Intel, we entered around $44.70, right? From a technical chart, that is somewhere around this region, 44.70. Okay, somewhere around here. Okay, so this is almost like close to the bottom of it, right? And the beauty of technical analysis is it allows you to really time your entry such that you can enter a trade kind of like close to that reversal, right? Where you can call it like bottom picking, okay? So technical has its advantage, okay? If today you are just purely based on fundamental, you might not be able to do that, okay? So you can see, while this is a long-term dividend investment idea, okay, we do protect our capital as well and our profits, right? I think that's important. So you can see for this trade itself, we have added in a stop as well, okay? So you can see here, stop loss SL, we have added a stop at $57.90, okay? So I've put it somewhere around here, right? Okay, so again, based on technical. Now the idea of having a stop here is so that if, let's say, Intel price starts to fall, okay, we'll be happy to exit this trade, okay, and of course catch whatever profits that we have from here, okay, and then we'll look for another opportunity to reinvest into Intel again, right? So for me, while I'm saying that this is like long-term dividend investment thesis, okay, but I'm also looking for capital gains, okay, so that's part of my approach towards constructing this portion of my portfolio, okay. So the idea here is, of course, if let's say this doesn't come down and just keep going up, then we'll just continue holding on to this particular stock, okay. So that's how I'm looking at building up the dividend portfolio, okay. So I hope it gives you a little bit of idea from there. Okay, so if you take a look at some of the latest entry, like PNG over here, okay, we have two positions, right? One of it I entered like just before the market crash last year. Okay, not a very good timing, but anyway, that made huge return back already. Okay, this year, 22nd of March, we just entered another position on PNG. Okay, so PNG over here give you this listing. This is the companies that I'm tracking. Let me show you where PNG is, right over here. Okay, so you can see PNG. Maybe let me just highlight that a little bit, right? Put it in blue. A little brighter so you can see, right? So you can see PNG over here. This is a scoring of 15 out of 21. Okay, so a pretty solid company as well. Okay, so fundamentally it's good. Okay, and let me walk you through the thought process again of how we look at it. Okay, so what happens is, of course, we look at valuation model as well. Okay, let me bring up PNG over here. Oh, I don't have it here. Okay, I don't have it here, but then let's take a look at another example, right? I don't have it prepared for today. Okay, let's look at J&J. Okay, same thing here. We have another new position that I've just entered on 24th of March. You can see over here, right? J&J. So same thing. Okay, J&J is actually a solid company. Okay, let me see, right? 11. Okay, so definitely now over here, right? 11. The scoring is 11 out of 21. So it's not as high as like what PNG or maybe Intel. Okay, but J&J is a big company, right? I think you probably have used its products. You probably come across its name. You probably know who J&J is, right? So it's not a super high fundamental scoring, okay? But let's take a look at J&J stock cards, okay? So I also consider the valuation of it, right? So over here you can see this year the value is just about overvalued by about $5. Okay, so that's pretty okay. Okay, so what is the model of valuation that I use is what we call dividend discount model, DDM in short. Okay, so DDM basically it takes into account like what's the current dividend this company is paying, what is the dividend growth that this company is likely going to experience, and then it calculates back whether it's worth to go in, okay, based on what price, based on purely dividend itself. Okay. So J&J is not too bad because the dividend growth here is 6.23%, okay, which means every year is growing its dividend by about 6.23%, right? And based on that valuation, okay, the IV, the intrinsic value of J&J is about $156, and right now the price is trading about 161. More or less, it's about just there, right? It's a bit of difference only. Okay, and from there, that's where we look at J&J technical charts. Okay, and you can see over here, we just have a breakout recently, right? And that's the reason why we actually got involved in J&J. Okay, so I hope you can see, right? These are some of the companies that we use to, the methods, okay, the process that I use to actually construct the dividend portfolio. Okay, so for example, you see over here, Broadcom Inc., right? AVGO, Disney, BlackRock, Intel, 3M, Apple, Visa, Hasbro, P&G, J&J, even Lockheed Martin, LMT. Okay, these are all companies that are based on dividend portfolio. Okay, which means we are prepared to hold it as long as it requires, and as long as we continue to see profits from it. Okay, so to show you another example on, let's say, LMT. Okay, so you can see on the list over here for LMT, the scoring is pretty solid, right? Something I like about it as well, right? Lockheed Martin has a scoring of 17 out of 21. Very strong fundamental company. Okay, and if we take a look at LMT stock cards, okay, you do see that it's already undervalued. A very solid company over here. Again, why is it undervalued? Because the price has been falling. Okay, and the valuation based on dividend is that the IV, the intrinsic value, the fair value should be about $530. Right now, LMT is trading about 361. Okay, so it's definitely at a super discount right now. Okay, and just to walk you through a little bit, so we took a look at seasonality, right? So if you take a look at LMT, the seasonality period here is the second one here, you can see, right? 22nd of March to 23rd of April. Okay, there's an 80% probability based on historical 15 years data. It tends to rally. Okay, that's the reason why you can see we actually entered LMT somewhere close to that period as well, right? 17th of March. Okay, and so far we are riding about 3% on this for now. Okay, let me show you the technical chart, right? So we entered somewhere around price point that we entered 350.6, right? Somewhere around here if I remember. Just about like that. Okay, so again, it's a breakout of it. Okay, why we are looking at it again, you see how this has come down a lot. Okay, that puts the valuation of LMT undervalued. It has a very solid fundamental, 17 out of 21. Okay, it has seasonality in it. It has huge potential dividend growth. And then from a technical side of things, it shows that there's upside potential. Okay, so all these factors again combine into it as to why we are actually investing into LMT. Okay, and of course over here you'll be able to also see that some of the positions are bigger, some of the positions are smaller. Again, it's not guesswork. Okay, it's all systematic approach. So if today a company is solid, the fundamental is there, the technical tells me to get involved, but valuation is overvalued, I'll go in a little bit smaller. Okay, so if you take a look at this here, J&J, right? You see my position recently entered is just about 1% of my entire portfolio. Okay, but LMT here we actually entered a little bit bigger. Okay, about close to 2%. Okay, why? Is because LMT is super undervalued, but J&J is just about fair value. Okay, that's the reason why you see that why some of the sizing is bigger, some of the sizing is lower. Okay, So I hope that helps in terms of giving you an idea as to how we construct certain trades, certain portfolio here. I think the objective is not to, not to confuse you, but the objective here is to give you the understanding so that you have that conviction, the confidence into knowing why we take certain trades, even if today you are following all this portfolio. Right? So I hope it helps. Now, the third strategy we mentioned is what we call momentum, right? We trade the stocks that has the tendency of rallying. Okay, so far there's no trades that is considered a momentum trade in my portfolio today. Why? Because the market is correcting. Okay, so there's no such thing as momentum to the upside right now. Okay, a lot of them, the stock right now is just basically the correction phase. Okay, so that's the idea behind it. Right, so I hope this can give you a good idea as to what are some of the things that I'm looking at. Okay, what are the processes that we put in to build up our portfolio. Okay, so hope it helps. Okay, maybe I feel a little bit in terms of like certain things that's happening right now in the market. Right, we just have the market open, so you can see all the market here, all the price is moving. Okay, maybe before we end off or even open up for Q&A, maybe some of you have some questions. Okay, just wanted to quickly walk you through like some forward-looking, or I would say an analysis, right? Moving forward, what can you expect? Okay, so for me right now, I'm keeping a very close watch to what's gonna happen in the bond market. Okay, so I believe if today you probably you're active in the financial market, you read a bit of news and headline, a lot of articles or traders are probably talking about interest rate yield, a bond yield, right? Or you might hear of this ticker symbol TNX. Okay, the idea here is people are expecting interest rate to be rising sooner than what the Fed is actually promising. Okay, and that will hurt stocks. Okay, which means that if the yield continue to rally and the Fed does indeed start hiking interest rates sooner than what they have mentioned, then you might see the stock market actually plummet. Okay, it can come down maybe 10 to 20%. Okay, that can happen. Okay, and right now at this very moment as we are speaking, okay, you might want to also consider, this is what I'm checking, right? Of course, if you're a little bit more active in your investment journey, then you might also want to consider looking at them. Okay, I'm paying a very close watch into these two comparison, right? One is what we call this, you can see over here, Moody's Season BAA Corporate Bond Yield, right? In short, it's just BAA Corporate Bond Yield. Okay, and this chart here tells us right now, as of today, the bond yield, BAA Corporate Bond Yield, is about 3.7%. Okay, in other words, if today you buy and invest into BAA Corporate Bond, you can get a yield of 3.7%. Okay, so very simple, right? So think of it as like the return, the profits you can get when you invest into it. And another comparison we are looking at here is the S&P 500 earnings yield. Okay, so it's almost similar to like you invest into S&P and then what can you expect in terms of the return. Okay, so for now today, as of what we are looking at, the S&P 500 earnings yield is only at 2.3%. Okay, so if you just compare this, right, based on the yield itself, one is 3.7, the other is 2.3. Okay, and then you ask yourself, which is more attractive? Okay, 3.7 or 2.3, right? Obviously it's 3.7. Okay, so what does this mean to you is that right now, as of today, the corporate bond, BAA corporate bond, is a little bit more attractive to investor compared to the S&P market. Okay, so what this means is that likely, okay, you're gonna see if this doesn't rotate back, okay, what you're gonna see is that funds will start to flow towards the bond market. Okay, which means that the stock market is likely gonna experience a little bit more of the correction. Okay, so do take note of that. Mentally you might want to prepare that your portfolio, we might see a little bit of a drawdown or even sideways move, right? So again, if you coming back to this, okay, you might see, let's say April, we might not make that high return. Okay, it might be just flat. Okay, so this is something you want to keep an eye on. Okay, so just mentally to prepare you, right? But obviously from my side, I'll be actively monitoring, managing our portfolio itself. Okay, some of you maybe are also asking like, will I be eventually adding Bitcoin into my kind of stocks portfolio? Okay, because of course eToro offers Bitcoin, right? Now, I'm definitely interested in it. Okay, in fact, I am tracking Bitcoin, right, from a technical point of view. Bitcoin doesn't have really a fundamental, right? Honestly, there's no usage of it. It's really purely speculation, right? But this speculative asset has indeed, rally a lot. Okay, it's a very volatile asset. But I'm definitely looking at it. Okay, so the only concern I really have right now is that would I want to add this into my portfolio to make it, when I add it in, my portfolio will be again be a little bit more volatile. Okay, but of course I'm not gonna go very big position into it. Okay, so this is something I perhaps would like to update you guys if you're following my portfolio, copying my portfolio. We are looking at it, right? Because some of you actually asked like, why am I not invested into Bitcoin? Or some of you are asking, is it a good time to look for Bitcoin? Okay, so understand that my decision is not gonna be because you asked for it and then I'm gonna put it into my portfolio. That's definitely not gonna be the case. Okay, I still need to go through my own systematic analysis process to understand if this is worthwhile. Okay, is it worth the risk? Is it worth the volatility for the upside? Okay, but I want to also highlight upon here is that there are a lot of updates recently in this week as well. Okay, so I think this one here, you guys are probably also seeing this on social media and things like that. Tesla, which is Elon Musk, finally say that you can actually buy Tesla using Bitcoin. Okay, and then right after that, you see Ray Dalio, which is one of the biggest, most successful hedge fund managers. Okay, who's managing Bridgewater Fund. I actually come in and say that there's a good probability that Bitcoin is gonna get outlawed, which means the Fed, the government in the US, will gonna step in and say that nope, Bitcoin is basically nothing. Okay, so there's of course the battle and the debate right now over here that's happening in Bitcoin. Okay, which is gonna create volatility. Okay, so I would say personally, I don't think it's the time now to invest yet. Okay, for me at least. Okay, but then of course you can argue that I should have done this like don't know how many times in the past, right, before it actually hit like 50,000. Okay, but again, I want you to know that don't just look at profits. That's not what I only look at, right? Because from managing a portfolio itself, the drawdown here is important, right? The volatility of my entire portfolio is important to me. Okay, and I believe if today you're following and copying my portfolio, that's important to you as well, right? That's the reason why you want to follow. It's because you know that the approach here is conservative. The drawdown, the volatility that you can expect is manageable. Okay, so that's the reason why. Okay, so I hope you understand that, right? We are not just gunning for that huge return, but we are also balancing off the risk in our portfolio. Okay, so that's super important to me, right? Just wanted to share with you that. Okay, good. Okay, so let me take a look at some of the questions that you guys have. Over here I see one question from MB, right, asking what about some UK stocks for dividend? Now honestly, we do have some, okay, but my focus is still very much in the US for mainly two reasons. Okay, first is that US is still one of the biggest stock market globally. Okay, I think that's a known fact. The second is that it's the most easily accessed market, okay, in terms of information that I can get, right? Because I look at fundamental, I look at seasonal, okay, in terms of the data that I can actually extract out, the most easily accessible information is still in the US market. Okay, but I can share with you like some solid companies in UK. Okay, that time we look at was Tesco. Okay, so this is also a company that is not too bad. They kind of like similar in this industry is Walmart. Okay, which is something that I'm looking out for in the US. Okay, it's actually Tesco listed in UK. Okay, of course you can, I think what we can do moving forward is that the idea here is when I'm doing this live stream, And of course, if you are following me on eToro, right, feel free to drop, the conversation, continue the conversation from here on eToro. You can post it on the feed, tag me, right, and then from there the discussion can keep going. Or you can actually drop by my YouTube channel, drop a comment, and then from there, I'll be able to continue the discussion and conversation, right? So, I don't really focus on the UK stocks, but let's say you are based in London, you're based in UK, you have certain companies that you like, maybe a secondary opinion, okay, feel free to do that, right? Then maybe if it's a solid company, I will also look into it. Okay, yeah, so I hope that helps. Good. Hey, so now this is the very first time we're doing this. I'm not sure how. Okay, I'm pretty sure. Okay, it's important to you guys who is following my portfolio, because I think you do not want to just blindly follow. Okay, and I feel it's important for me to come in maybe on a bi-weekly to walk you through the portfolio, to keep you updated, so that you know that whatever we invest into, they are not emotional trades, right? It's definitely not. Okay, and I want you to understand the process so that you appreciate it. Okay, and of course, the end goal, the result here is that you would have that conviction, the confidence to follow the entire portfolio. Okay, but of course, we will also like to be opening up maybe, for like parts or portion of this stream where you'll be able to ask questions, I'll answer some of them, okay, or even drop a few companies, right, that you would like a secondary opinion, and then from there, we can look at it. If it's good, okay, I might also invest into it, right? And then of course, thank you for bringing up that particular stock, that opportunity. All right, so great. Okay, so that's about it. Okay, for today. It's really a casual sharing. Just wanted to keep you guys updated. Okay, let me know in the comments. While you're watching this stream, let me know maybe what are some of the things you would like to see in the future in something like this. Okay, what are some of the maybe elements, okay, I don't know, that you would like me to include in, okay, or okay, let me know maybe on any improvement, I don't know, okay, basically anything that you feel that can benefit you, alright, let me know in the comments, and then from there we'll work on it, we'll improve on it, okay, in the subsequent live stream. Okay, last one here to, okay, coming back to this, okay, do I have that? Maybe I'll show you again on this. Okay, moving forward in April, this is what I planned. Okay, so if you actually see at the bottom right side, right, this is what I planned. Okay, we're gonna have a stream on Monday evening, Thursday evening, and of course today, Friday evening, right? The idea here is on Monday we're gonna talk about trading. Okay, we'll do market analysis, trading in my YouTube channel over here. Okay, Thursday is the same thing, but we're gonna do it in Chinese, okay, Mandarin. And then Friday is gonna be something like what we do today, right? It's more for like the stocks, okay? So I hope that helps. Okay, so MB actually posted, play around with, okay, I'm using OBS, so let me play around with this, right? So you mentioned UK stocks have some good dividends, but not sure how reliable they are, like BAE, System, Unilever, Tesco. Cool. Hey, yep, okay, so two companies that you listed there are definitely solid companies. Okay, one of it is Unilever, the other is Tesco. These are solid fundamental companies. Okay, but maybe let me, I'll go and do my analysis on it. Okay, and then what I'll do, okay, if you're on eToro, just follow me. Okay, you do not need to copy me yet. Okay, if you feel that you need more time to follow through, just follow me. Then what I'll do is on the feed here, I'll start to post some analysis, right? Okay, and if you're following me, whenever I post something on the feed, I think you receive a notification, right? And then from there, you'll be able to also see the analysis. Okay, yeah, so good. I'll actually put in some work and research into like BAE, System, Unilever, and Tesco, and then share with you if those are companies that are solid. Okay, yeah. Yeah, but the chart looks solid, right? Unilever here, you can see you have been following and then falling down, and then right now this shows this sign. Okay, from a technical point of view, this V shape here is solid. Okay, so from a technical point of view, you can see this V shape here is solid. Okay, so if this starts to correct like that, I think after I go through the fundamental and things like that, you need to see if this is a worthwhile to be invested in, okay, for Unilever. Okay, but I'll update the analysis. I think I'll post, maybe once I've done this, I'll post a video on YouTube, post it up on eToro platform as well under newsfeed. You'll be able to look at it. Okay, and then hopefully you'll be able to help you if you're looking at all these UK companies. Good. Right, so that's all that I have for today. Okay, again, really appreciate and thank you guys for joining in this live stream. It's a bit last minute, but I thought, you know, just let's do it casually starting today, and then let's see how it goes, right? Okay, so really appreciate for you guys to join in. Okay, hopefully we'll be able to do this on a regular basis, right? I really enjoyed it. To be able to connect, converse, bounce ideas with you guys, and of course keep you guys updated as to what the market is doing, what am I looking out for. Okay, so we'll end off this stream over here. Okay, all the best to you and have a great weekend ahead. Okay, and I'll see you guys real soon